So, Wang,
Yeah, hi.
welcome to the World Wealth Creation Conference 2017 in Singapore.
Thank you very much.
So you're the CEO of MegaTrust in Hong Kong?
Yes, based in Hong Kong, but majority of my team are originally from Shanghai. Our headquarters in Shanghai, China.
Yeah.
And we are a boutique fund manager specializing in Chinese equities, a special class of shares called China A shares, now the second largest equity market in the world.
Great, and doing very well. And so you're from the background of MSCI and China Everbright?
Yes, I started my career at Wall Street, starting with a firm called Goldman Sachs back in the late 90s. And
I think I've heard of them.
That's right. That's when it was still a private company. Worked many jobs. 20-year career on Wall Street, never seen as something as big as China A share today. The importance, the potential liquidity flow in this market, how people are under investing and paying not too much enough attention to this market also presents opportunities.
Absolutely. And so you are, by some, considered a genius from China. But your fund assets under management is already doing incredibly well.
Yes, geniuses I think is overrated. But I was saying earlier at the conference that the typical retail mentality in China is think they're smarter than the next guy, they're faster than the next guy, but at the end of the day, you don't really make any money. So we kind of take the opposite approach, which is more patient, more fundamental based, more bottom up, more disciplined approach to a very challenging market, a sophisticated, opaque market. But if you do this over a long time horizon, you get paid off pretty well. So not by acting fast, but really acting sensibly, do your homework and pick stocks and protect your downside and exercise investment discipline. And all the common sense that you would do with any markets applied to China, I think you will be okay.
Fantastic. And one of the subjects you were talking about here at the conference is the global trends that people should be starting to follow. What would you say are a couple of the key global trends that people should be following to maximize investment potential over the next 10 years?
Massive things, massive changes happening in our industry. Again, I've been in this industry for the financial industry, asset management industry for 20 years, and really we are at an inflection point of a paradigm shift. That paradigm shift is probably characterized by three things from my perspective. Of course, China is one of them. As I mentioned earlier, the China A share is an underinvested market, and we expect $640 billion in inflow into this market over the next 3 years. That's a big deal. Number two is the true conversion, so-called integration and of technology and finance. There's the fintech thing, but fintech is very broad. It covers Bitcoin, covers robo-advisor. So I'm referring to all of them. So how would technology eventually change this industry? By the way, we're the last one to go. Just look at how technology changed retail. We're not even halfway through that. For financials, we're the most resistant to change in that sense. But in the next few years, it's going to be completely different. How Bitcoin will change the world, how something like smart beta, robo-advisor, artificial intelligence, it's going to completely change how we do business, how we invest, how we talk to our clients, how we do research.
Yeah, absolutely. And you've touched on a couple of key areas there, artificial intelligence being one of them, the robo-advisors. How might that impact the client experience?
I haven't really thought too much about the client experience side, but I think you hit the nail on the head. I think ultimately it's about the user experience.
Yes.
I'll just give an example. I'm an expert on this topic because I've been a tech analyst for almost 10 years on the sales side. So, let me use Apple as an example. Apple, some people say it's a technology company. To my knowledge, or in my view, it's a consumer company. What Apple is really good at is not really the originating the technology, but it's really make the technology a user-friendly technology. And back to your question about the user experience and investor experience. So, same logic. I think the key opportunities going forward, if you want to think of the cross-section of technology finance going forward, is going to be along the same line. It's not about the techies, it's not about the finance, it's really about people who can mingle the two and people who can create a product or service that's accessible and user-friendly to the average common user.
Okay, so why would somebody want to invest in Chinese equities today, and what are the prospects going forward?
Well, earlier I talked about the secular growth drivers in this very large, diverse country. The economy is slowing down, but there's still a lot of juice left in the other areas of the economy, such as healthcare, consumer, technology, etc. To avoid a prolonged discussion on fundamentals, very simple things. As I said earlier, we expect 640 billion US dollars inflow into this market. And do you want to be in front of that 640 or after that for 640? So this is exactly the argument I'm making, that you should be thinking about doing it before the real money started coming into this market.
Yeah, and this is key. What is the methodology to create absolute returns on these funds over the next few years?
Well, again, everyone have their own views about how you make money, but for us, it seems to be about alpha. Alpha refers to the excess return you earn over the market. So for us, it's all about alpha. So if you focus on generating alpha, beat the market, whether it's in the short term or long term, eventually you will get absolute return, because you can assume over the long term, the market will give you a positive beta return. Could be 2%, could be 6%, but if you have another 5-6% alpha on it, you're pretty well off with a very long horizon absolute return.
Fantastic. And you did touch on Bitcoin briefly earlier, in cryptocurrency, and obviously the Chinese one, which is well known, NEO. Do you have any opinions about this as an investment instrument?
One of my best friends actually runs a Bitcoin business. I bought Bitcoin when it was $200. Now it's like close to 10,000. But I still don't know what I own, honestly. I'm still confounded why the Bitcoin phenomenon began to take off. But there's one observation I made about Bitcoin, which is any other so-called bubble, or the tulip bubble back in Europe, or the internet bubble, any of these bubbles, if there's any fraud, such as Bitcoin has gone through many frauds. Any fraud to the scale of a Bitcoin fraud, like the Monk Gold, the Japanese, the company went down, it'll be over. But it didn't. Bitcoin has gone through multiple frauds, multiple disasters, and still here today. That's something that confounded me. So really nothing else intelligent to say. But I do want to say a very important thing, which is today, as an investment professional, as a financial professional, as a trader, you really have to know so much. And that's why this conference is such a worthwhile event, because here you get exposed to so many different things, from entrepreneurship to creativity to running a business, to managing people, and to trading, to knowing about China, stocks, bonds, etc. And you do have all these things. Yeah. So I remember when I was a tech analyst at one of the investment banks back in the late 90s, I didn't really have to know too much anything beyond technology. By 2007, I never heard of Subprime. And as a Wall Street guy, never heard of Subprime. I didn't have to worry about Subprime. But eventually,
neither did I as a former banker either. I was like, where did that come from? So
now Subprime changed the world. But again, back to earlier question, one of the things that we should be watching for is that the amount of knowledge you need to develop. You can no longer live your own kingdom, a regime saying that this is the only thing I do, this is the only thing I care, and that's all I need to research into or know about. You really have to cover so many different changes. And what's also challenging is the internet really fasten everything. The pace of change is increasing exponentially.
Absolutely. And your returns are absolutely incredible. 400% over 10 years versus the baseline index.
And that's nothing.
Yeah. So that's incredible. So we're going to take your advice on this. But what one piece of advice would you give to people launching into China equities fresh as of today?
Well, many advice, but if there's one advice, I would say keep an open mind. Don't try to transplant your emerging market experience or developed market experience. And China is neither developed market nor emerging markets. China is China. And there are a lot of China-specific things you need to keep an open mind about. Earlier, I mentioned the case of Shanghai Airport as a consumer play. For many people, it's hard to believe infrastructure play can become a consumer play, but that's the case about China, and that's exactly why you need to have an open mind towards these type of things.
Fantastic. Wang, thank you very much.
Thank you.
Yeah.
Nice talking to you.
And you. Thank you.